I'm Catherine Ross, live from the NYSE, and filling in again for Jim Cramer is Action Alerts Plus's senior analyst, Jeff Marks. For those who have missed our show yesterday, Action Alerts Plus is our members-only club where you can get more portfolio exclusives from top analysts like Jeff and more on Cramer's team that we won't hit on here. So you got to sign up at actionalertsplus.com. All right, Jeff, we got a whole slew of topics to go through.
It's a big day today.
We got Disney, we've got Bed Bath & Beyond, and of course we got to talk about Amazon. But first, let's hit on Disney. We actually have our Real Money reporter, Kevin Curran, here, and he is going to talk about what he's looking at since Disney is our Real Money stock of the day. Now, Kevin, I want to start with you, and I just want to ask you, what are you looking at, and what are investors looking at this event today?
Well, actually, I just got off the phone with a couple of shareholders as well as a couple of analysts, and luckily for Disney shareholders, it's all pretty positive. I mean, we had the movie slate is one of the first ones. Captain Marvel was a $1 billion movie. We got Frozen 2, Lion King, the new Star Wars movie, and the new Avengers movie all coming out, so that should be...
Aladdin as well, that's going to be a big one too.
Yep, and Dumbo's come out already, so there's a ton of movies that are going to add to studio revenue, and actually that's not only good for the studio, but that's good for toys, and eventually the streaming platform, which I think is going to be the biggest topic of conversation at the Investor Day today.
Which they'll be unveiling. So Jeff, what about you? What are you looking at? What are investors looking at?
You know, so we talked a lot about the streaming service. We've gone into how this is going to be, a revolutionary product in the space. It's going to rival Netflix, combined with Hulu and ESPN Plus. They're going to have a three-pronged attack to tackle more of like the animated side, more of the millennial side with Hulu, and sports with ESPN. So I'm looking forward to that. The movie slate, which Kevin touched on, is great. I think if you can talk about that, the way between the Fox studios that they picked up with Disney, as well as what they already have. I mean, Disney has the potential to just dominate the box office for the next couple years. And that's a very predictable revenue stream when you're trying to think about, okay, what are earnings going to be like this year? And also, I'm excited for the nostalgia factor, right? I mean, this is going to be a day of the stars. They're going to bring people up. People are going to remember the Disney brand. And I think you're going to see a spike in park attendance and people wanting to travel back to their parks because of this, because it's going to excite people. That's what they're trying to accomplish today.
I'm already excited because Lion King trailer, I'm all hyped up. All right, and based on your reporting today, do you think that Disney is a buy?
Well, I would, because there's so many catalysts, as we mentioned. And I think that you don't have to take my word for it. We had Stephen Guilfoyle this morning saying that he was looking at the charts and he thinks that a breakout into the 130s is actually conservative. And I know that Action Alerts Plus is a long-term holder as well. And when you're looking at that streaming platform that could be valuation side like Netflix, Apple, and Amazon now is a four-headed monster of streaming services, I think that's going to be something really interesting to watch and could add a lot of value to that stock in the near term.
What about you? What do you think about it?
It's a good question. My only issue right now is that it's run so much into this event that the question is, will it live up to expectations? So what we generally advise in Action Alerts Plus in this type of scenario is you buy a little bit before. If it comes in, you buy a little bit after. I mean, into this event, I've heard the bear case being, okay, will the Disney products have enough to really engage subscribers? Will it be binge-worthy, so to speak, like Netflix? And I would come back and argue, well, they just bought all of this content from Fox. That's going to be what you need. It's not like Netflix right away had the binge-worthy stuff. So, I mean, with the Fox family of networks, when they picked up like channels like FX, I think that's going to get people onto the platform right away. It's going to have an attractive price point as well. So I think the event will go well. So again, you buy a little bit before, you buy a little bit after, but I like this as a long-term holding. We've owned it for Action Alerts Plus for a while, so I like it.
Yeah, and Jeff, if I can jump in on the streaming platform, I think one of the great things that Disney has is a lot of content. One of the big concerns about Netflix is that they need to keep burning cash to build that backlog of content that can compete while companies like Disney are pulling their content off of their platform. And that's a huge competitive advantage to me, and will also allow them to keep prices lower than Netflix, which has seen itself have to raise prices over the last couple of years.
I know from my own personal experience, whenever a new Marvel movie hits Netflix, that's the first thing I watch when it comes out. And I'm one of those guys, if you Google like what's new to Netflix this month, that's where it shows up, that's where you get excited. I mean, so from my own personal experience, I know I'll be watching their Disney's content right away.
Now, Kevin Curran mentioned Stephen Guilfoyle, who's another Real Money contributor, and you can find his daily recon on realmoney.com, and you can find everything from Kevin Curran on what you need to know from Disney all day today.
I'll be all over it. I'm going to go jump back on it right now. Thank you, Kevin.
All right, thanks for joining us. All right, Jeff, I think that we need to switch gears because I want to talk to you about Bed Bath & Beyond. Now, they posted earnings last night. They beat, but then the shares fell. They've got activist investors involved. I'm wondering, what are you looking at right now?
Yeah, I mean, there's plenty of smart activists involved in the stock right now. I just think the story is a little bit too tough for me. There's much better retailers out there. For example, for Action Alerts Plus, we own Kohl's. Jim had a great interview with their CEO, Michelle Goss, last night. I would recommend checking that one out. There's Home Depot, which we own, doing very well too. And there's Five Below, who their stock was upgraded, big upgrade today by JP Morgan. And we're actually going to be talking about that more on our Action Alerts Plus call right after this. We're going to get into that upgrade, so we're going to dive into that one a little bit more. But I mean, it's just too tough to own. They're getting hurt by Amazon, Bed Bath & Beyond. So to me, I would stay away from that one.
Now, on the topic of earnings, you guys have a call tomorrow
Huge call.
based on earnings, right?
Yeah. So I mean, earnings season, it's tough. Which is why on our Action Alerts Plus conference call tomorrow, we're going to be going into the 5 things you need to know for every earnings season. This will apply quarter to quarter. It's not specific to this one. We're also going to be answering your calls. I've tallied a Q&A list so far. I'm still looking for more. So if you're interested in submitting a question for Jim to answer tomorrow, trial us. Sign up, trial us for Action Alerts Plus. We'll be happy to take your question. We're going to try and do some live questions too during it, so it's going to be a great time. Tomorrow's a very busy day. We're going to have JP Morgan earnings out as well. So a lot going on right now. Very exciting time though.
And you can find that over on actionalertsplus.com. Okay, Jeff, let's talk Amazon. There's a whole lot of headlines here, but one thing that's really hitting the headlines this morning is the investor letter. What do you think about that?
Yeah, I thought it was a great letter by Jeff Bezos today. I mean, he hit the right points. He was humble where he needed to be, but he talked a lot about innovation and how what Amazon's trying to do right now is they're trying to create the products that you don't even know that you want yet. Perfect example that he referenced was the Echo. But at the same time, that humility came in because he talked about the failures of the Fire phone, which was a miss. So all in, I just think Amazon is a terrific story. They're doing, again, like as he said, they're doing what the customers want. And that's why Amazon Web Services has been so successful as well. That's such a profit engine for them. So all in, it's a good story. It was a good story for them today. The stock's not really reacting to it, but longer term, we still like that one a lot.
I mean, there's just so many headlines that it would be surprising for the stock to, it's just one of those things where we're seeing so many things flood it, from the Amazon Alexa story to the investor letter.
Yeah, well, I mean, the stock is also, it's been on a big run recently, and I think that's because when you look at this string of IPOs that are going on, they all use Amazon Web Services for their cloud computing. So it's just another tribute to the success that they've had with that business.
All right, Jeff, thank you for all of your insight. And now I want to just make sure that everyone knows we have a very special webinar today at 1 p.m. Eastern. We teamed up with TurboTax, and you can find everything that you need to know about your retirement and tax season at 1 p.m. on TheStreet.com. All right, guys, I'm Catherine Ross of The Street. We'll see you all tomorrow.